Good afternoon. AIC Mines is a copper miner, a copper developer and a copper explorer. We own and operate the Eloise mine located 60 kilometres southeast of Cloncurry in North West Queensland. We produce copper in concentrate and truck that concentrate to Mount Isa for smelting. Everything we need needs copper. Clean energy, decarbonisation runs on copper wiring. Data centres, the AI build-out requires an enormous amount of copper per gigawatt of power delivered. Electric cars, they use 5 times the amount of copper of an ICE, and the military. A massive rearmament is currently taking place, which may not surprise you. And on top of that, modern weapons actually rely heavily on electronics. As a result, copper demand is outpacing supply. The copper price is currently high and predicted to go higher. So including a copper mining company in your investment portfolio is a reasonably easy decision to make, I think, but then it does get complicated. I recognise that. How do you decide which copper company to invest in? Here are the key factors to consider when you make or as you make that choice. Feel free to take a photo of this. It's not in our ASX release. I didn't think it was relevant, but I think it is relevant for an investor conference. This is what this is, an investor conference. This is a checklist that both myself and ChatGPT think you should be ticking off as you list. So maybe if you haven't taken a photo, just chuck it into chat. That's where it came from. But we all should be looking through some sort of a checklist, something very similar to this. It's very sensible. And as you listen to presentations at this conference, walk through it, I recognise, and I fully understand that trying to pick a winner at a conference like this is actually a daunting task with 70 presenters all chasing your attention. So to try to make your decision-making easier, to try to help, I will cover these 10 factors directly in my presentation. Now, although it may come as no surprise to you that I think AIC Mines and the Eloise copper mine scores a 10 out of 10 on this list. No more spoilers, let's get into it. Let's start with management track record and balance sheet strength, number 1 and number 2 on the checklist. Our board comprises individuals with a strong track record in building mines and building mining companies. Both mining companies and mining services companies. They've seen success and they've been through tough times too. They're a great board for a junior miner. Our management team brings deep experience from mid-tier and major miners, including Evolution, Teck, Whitehaven and Rio Tinto. We know what good looks like, and we have brought that discipline to AIC. As a result, we've built a strong reputation for delivering on promise. Yesterday, we announced some changes to the board and leadership, with the appointment of Clint Donkin as CEO, my transition to chairman, and the retirement of our current chairman, Joseph Alraghi. The changes will happen in October this year. I believe it's the right time to make the changes as AIC Mines progresses from a period of strong organic growth towards production ramp-up, operational improvement, and inorganic growth. These board and management changes strengthen the company's operational capability while retaining corporate knowledge. That's a nice way of saying me. I'm very much looking forward to being focused on strategy and inorganic growth. Now is the right time to be looking for our next project. To the balance sheet, number 2 on our checklist. Our Eloise mine is producing strong cash flow. Eloise generated $63.3 million in net mine cash flow after capital investment in FY26, more than 2 times, or exactly what we did over the previous 2 years combined. It's providing strong cash funding support to the Jericho mine development and the Eloise processing plant expansion. On top of that, we have a debt facility from our off-taker, Trafigura, for US $50 million, of which US $30 million has been drawn, and we expect to draw another $10 million this quarter. The final $10 million, which we recently added, is there for prudence. We do not expect to draw it. We do not need any additional capital to complete the 1.1 million tonne per annum expansion or the stage 2, 1.5 million tonne per annum expansion, and I'll talk more about these in a moment. Now let's go through the 3 project factors on the checklist. What have I pressed wrong here? Can you advance that for me, please? Thank you. The three project factors: stage of the project, quality of the project and production costs. Eloise has been in production for 30 years. We've owned the mine since November 2021, so it's a very well understood ore body. It's a great ore body, high grade and continuous. It produces a readily saleable concentrate, very clean concentrate. It's deep, so we have some heat and seismicity issues, but we understand these issues and we are managing them well. The commencement of mining in the new Jericho ore body reduces our single mine risk. Eloise had a great FY26, achieving guidance for the third year in a row. It produced 13,064 tonnes of copper and 6,621 ounces of gold in concentrate at an all-in sustaining cost of Aussie $4.99 a pound. Production increases materially over the next few years as we complete the plant upgrades and obviously bring the new Jericho mine online. We've recently released our 3-year production outlook. We have guided production of 17,500 to 18,500 tonnes of copper in concentrate this year, lifting to 20 to 22,000 tonnes copper in FY28, and then lifting further to over 25,000 tonnes per annum from FY29. We double production over the next 2 years. Now back to the checklist items. I will address, but very briefly, number 7, 8 and 9, that's infrastructure, access, jurisdiction risk and environmental risk, because we're operating in the Mount Isa region in North West Queensland, a great place to operate, a mining district with good infrastructure and strong support for mining, underpinned by the rule of law and institutional transparency. Good, we're working again. We acquired the Jericho deposit, located only 4 kilometres south of Eloise in January 2023. It was an exploration project when we acquired it. In April this year, only 3.5 years after completing that acquisition of an exploration project, we sold the first copper concentrate from that project. Underground development at Jericho is on schedule to achieve a combined production rate from Eloise plus Jericho of 1.1 million tonnes per annum by December this year, in line with the commissioning of the 1.1 million tonne per annum plant expansion. Jericho is a great ore body. It is very continuous and has similar geological and metallurgical characteristics to Eloise. During the June quarter just completed, we ran some Jericho ore through the current plant to confirm our metallurgical assumptions and then to assess the optimal plant setup for later this year, a key step to de-risking the new plant commissioning schedule. The blended ore trial, that's blended Eloise plus Jericho going through, produced on-spec concentrate and average copper recovery of 92.3%. That compares well to what we're currently getting at Eloise of 93 to 95%. For a first pass trial, that's an excellent result. And well within actual normal operating parameters anyway of Eloise. The single feed trial also produced on-spec concentrate with average copper recovery of 90.3%. The results were better than expected, given it was a relatively low-grade parcel of ore that we put through. We're not really in the guts of the ore body yet. Similar to the blended ore trial, the single feed trial provided confidence in the long-term metallurgical assumptions for the expanded processing plant and also provided useful information for how we optimise this plant in the future. Jericho ore development is now being, Jericho development ore, we're not yet stoping, but the development ore is now being routinely blended with Eloise and processed. The ore body is performing well, and the recent grade control drilling in the Jolly Chute actually produced better copper and gold grades than the ore body model had predicted. So we're expecting a trouble-free ramp-up at Jericho during the December quarter this year. A little bit of history for those who weren't here last year or maybe even the year before. With the acquisition of Jericho in 2023, a bigger processing plant was warranted at Eloise. We awarded an EPC contract to GR Engineering to expand the current 700,000 tonne per annum plant to 1.1 million tonnes per annum this time last year. We included in the design two important features. We designed it to minimise operational impacts to Eloise during the construction, right now, and we oversized most of the equipment ready for a stage 2 expansion to 1.5 million tonnes per annum. Both of these have been great decisions. The expansion is on budget and on schedule for commissioning in the December quarter. GRES are doing a great job. The exciting news, though, more recently has been our commitment to develop Jericho as quickly as possible underground and ramp up to the 1.5 million tonne per annum mining rate by FY29. Accelerating the stage 2 expansion to 1.5 million tonnes per annum requires increased capital in FY27 and FY28 to achieve that mining rate, but it is the optimum rate and it brings value forward, significant value. Well, the 1.5 million tonne per annum case is the best NPV and IRR option for this asset. The cost to expand the plant from 1.1 million tonnes per annum to 1.5 is minimal, only $15 million, as most of the equipment is already sized for 1.5 million tonnes per annum. The additional capital expenditure is predominantly underground development and surface infrastructure, such as tailings, water dams and ventilation. We've been able to commit to that expenditure because of the copper price. At current spot prices of around $18,500 a tonne Aussie, Eloise and Jericho generate sufficient cash flow to pay for the accelerated development and then some. We acquired Eloise in November 2021. It had no reserves, 2 years of resources and was producing 12,500 tonnes of copper annually. We now have a mine with a 20-year outlook and a pathway to 25,000 tonnes per annum copper. That's a 10-fold increase in resources and a doubling of production. The market is slowly waking up to this amazing transformation. Number 9, our growth pipeline. The Eloise processing plant, as I sort of intimated, now has the largest resource base that it's ever had in its 30-year history. That's a great position to be in, but we're not stopping there. Jericho remains open at depth and along strike. We've got a great ground holding with strong, pervasive structures known to host mineralisation, and we have got good geophysical targets along those structures. We're not going to die wondering. We're going to drill deep holes at Jericho to try to understand the full extent of that ore body. The drilling this is interesting, worth noting, that the drilling we conducted last calendar year in 2025 increased the resource base at Jericho by 15%. It added 63,900 tonnes of copper to resources at a discovery cost of approximately 1.5 cents a pound. That's amazing value add. That compares to the current copper price of $9.20 a pound. We added copper resources at 1.5 cents. We would be mad not to continue drilling there. We have a large regional ground holding with the potential for a second standalone project. That would be a game changer. 10 to 12 targets will be drill tested this year at a cost of about $6 million. Only time will tell. We're ready for growth. We have the team, we have the skills, we now need the project. That has been about 30% of my focus over the past few years. When I take up the chairman role in October, it will become almost 100% of my focus. I'm not retiring, I won't be playing golf, I'm getting ready for an M&A frenzy. A disciplined M&A frenzy, where will remain the normal caution. You know AIC, you know the caution, you know my background. We're looking for opportunistic, logical, value accretive acquisitions, but that'll be 100% of my focus. Checklist item number 10, the big one, valuation. Don't take my word for it. Listen to the experts. Paul Kaner at Ords has a 90-cent price target. Ring the bell. David Coates, we're well ahead on schedule anyway, guys. David Coates at Bell Potter, and that's a great story. David Coates at Bell Potter, 95-cent target price. Dan Roden at Jefferies, $1 price target. Peter Cormandy at Shaw and Partners, $1.10 price target. Hayden Bairstow at Argonaut, $1.20. Dan Morgan at Barrenjoey, $1.20. In summary, we are progressively de-risking the 1.1 million tonne per annum expansion. We've committed to the second stage expansion of 1.5 million tonnes per annum by FY29, for which we don't need additional capital. We now have a mine with a 20-year resource base and a clear line of sight to annual production of 25,000 tonnes of copper. You cannot own too many AIC Mines shares. Thank you.